What is going on, traders? So it's no doubt that most people think that the stock market is broken. As a matter of fact, if you're watching this, you're probably one of them. Last month's inflation numbers still came in sky high. However, the market keeps on rocketing. Why is this? And if you follow this channel, you know that I try to keep you guys updated with the most relevant information that we have at the time. And I've consistently said that if such and such happens, the market will rally insanely. Now, I'm not Nostradamus. I just know the relationship between the Fed and the markets. And since 2008, the markets are largely dependent on what the Fed does. It's always been dependent on what the Fed does, but more so than ever since 2008 because the Fed has implemented some brand new monetary policy called quantitative easing. Now, I'm not going to go into much detail on what that is here because this isn't what the video is about. However, I said that if the Fed shows that they are going to take their foot off of the gas come September, because that is when the next FOMC meeting is, and if earnings, because at the time that I was doing these videos, I was saying that if earnings and guidance are not terrible, and there is an appearance that the Fed is going to take its foot off the gas, then that will give runway for the markets to rally again. And during the last FOMC meeting, the Fed signaled that we are already at neutral. Neutral basically means that when the interest rates don't need to be raised or decreased, and monetary policy is just fine for the current conditions. However, inflation came in at 8.5% year over year for July. So that left most people's heads shaking, including Bill Ackman, Druckenmiller, Michael Burry, me. Obviously, I'm not in the same company as those guys, but it left most people who follow this stuff baffled. And now it looks like we're at a crossroads because the GDP came in negative, job numbers were way better than expected, and it looks like inflation is trending down. So are we trying to fight high inflation, or are we trying to fight a slowing down economy? Because the policies that would fight each of those things are entirely different. When you're trying to fight a slowing down economy, what you do is you either stop raising rates or you decrease rates. And when you're trying to fight high inflation, you have to increase rates in order to do that. So initially, the market drop from January was pricing in a very aggressive Fed for 2022 and beyond. And they were also pricing in inflation, and they were also pricing in a slowing down economy and the fact that the Fed has to raise aggressively to fight inflation. However, with them signaling that we are already at neutral and with inflation trending down, especially with an upcoming midterm election cycle, it is no surprise that the market now is pricing in that the Fed is going to be a lot easier than we thought during the beginning of the year. So this is definitely one of the weirdest times in the market with a lot of conflicting signals. We got two back-to-back negative GDP quarters. We have a record-breaking jobs number report coming in for July. Inflation is still high, but it has definitely peaked. And we still have quantitative tightening set to increase and ramp up in September. So is the Fed going to go easy in September, and is the stock market expecting volatility? And what should we do about stocks? Is it time to buy or not? This is why I keep hammering to you guys, as well as the members in the Traveling Trader Academy, that there comes a certain point where it doesn't matter what the market is going to do. If the stock market is willing to give you certain discounts on blue chips, you have to take them if you have a span of a long-term span of multiple years. And I always make a habit of starting to buy during bear markets. This is why when we entered a bear market in May, I said, I don't know when the bottom is, but there are a number of stocks that are too cheap for me to pass up from a dollar cost averaging standpoint. And these are some of the stocks that I dollar cost average into in May. Now, obviously, I was a little early because the bottom was June, but I'm not expecting to catch the bottom. As an investor, that is not my expectation. It would be nice, but that is not my expectation, and that shouldn't be yours either. However, when certain stocks get cheap enough, and those are stocks that you've been eyeing for a very long time, and stocks that don't normally draw down 30, 40, 50%, then that is the time to buy. Now, I'm not talking about hyper growth stocks. Look at the stocks that I ended up buying back in May 15th. It was the SPY-V, the triple Qs, Apple, Microsoft, Amazon, Berkshire Hathaway, Disney, and XLF, which is the financial sector of the S&P 500. That is when I also sold cash secured puts on stocks that I wanted to own. Now, admittedly, I didn't deploy all of my cash. I would have definitely liked to buy more in June, but company earnings were coming up, and earnings were a huge unknown factor that was still on the table. But I am glad I did at least invest in the market in May because, as I said, I make a habit of investing every time the stock market says it's in a bear market, because history shows you're always going to come out winning if you have a long-term horizon. If you want access to what I'm buying long-term, the day trades, the options day trade watch list, our option swing trades, the Zoom calls and masterminds that I host myself, and book a session on how to improve your trading with one of our ambassadors. All right, so is the market going to keep rallying? Well, it looks like we are at a very tough resistance point here on the S&P 500. However, I could see some stagnation between now and what happens in September. And if the Fed actually goes easy in September, then I think that will give runway for the markets to get near all-time highs, which is crazy to think considering where we started in January. This would mark one of the shortest bear markets in history. It would also be the only bear market in history where the VIX has not gotten above 40. The VIX is the fear gauge index of the S&P 500 based on how S&P 500 options traders are betting. Every single bear market in history, the VIX went above 40. In this case, we got close at 38, but we've never hit above 40. And if this is the bottom and we've entered a new phase in the market, then this will be the only bear market in history where we haven't gotten above 40. However, there is a little bit of uncertainty creeping in because currently the VIX is around 20, but for September, the VIX is actually at 24. So bettors are betting that there's going to be a little more volatility in the markets come September. And that is no coincidence because that is when the next FOMC meeting is. Now, if the Fed does this, and I will show you this video here, and this is Luthold Group's Jim Paulson, who is actually someone who's worth listening to in this space. He makes a very good case for the fact that the Fed cannot actually raise rates beyond September. Let's hear what he has to say, and I'll react to it.
Now that growth has really slowed to a crawl in real terms, and inflation is clearly rolled over, how fast it's going to come down is still debatable, but it's clearly rolled over. Now the Fed is hawkish as ever. And I really think that the Fed's been behind the curve is still, and the reality is that the case for additional tightening at this point is starting to lose its gravitas. It just doesn't make a lot of sense. With real growth slowing to 0 to 1% and commodity inflation now becoming commodity deflation, with core CPI, PPI, PCE all rolling over in recent months and decelerating year on year, with annual wage inflation rolling over. At the end of the year, wage inflation on a 6-month basis was 5.6. Now it's 4.3 in the last 6 months. I just think by the time we get to the September meeting, claim numbers probably are a little worse, growth is a little worse, inflation's a little better, and the case to really tighten much longer is going out the window.
Fed officials will look at that. You say the case to tighten much is going out the window. Do you think that means that they really do change their tune that quickly and essentially just do a token raise or none at all?
I do. I think they certainly could do 25 basis points or something in the September meeting. That's my guess. But I think then they'll probably be done. I really think
So what Jim Paulson is saying is that the Fed can't actually afford to raise rates when all of this stuff is rolling over. He talked about wage inflation, core CPI, PPI, CPI itself, PCE. He's saying all these things are rolling over. And it certainly wasn't the Fed that caused that, because usually we see at least a 1-year lag time between what the Fed does and how those policies impact the economy. So with an economy that's growing at 0 to 1%, the Fed can't possibly do another 75 basis point rate hike in September. Now, obviously, Jim Paulson doesn't work for the Fed, and neither do I, so nobody knows. The Fed can come in and do a 50 or 75 basis point rate hike. The next CPI numbers come out September 13th, and the next FOMC meeting is September 21st. So we will see whether inflation has in fact rolled over before the Fed acts. Now, if the CPI comes in even lower than 8.5%, which is what it came in for July, so let's say it comes in at 8.2%, then I actually do think that the Fed is going to go easy and just do a token raise just as a formality of 25 basis points. I think not doing anything looks bad, but I don't think that they go 50 or 75, especially if there is an election right around the corner. Doing a 25 basis point rate hike is going to boost the markets, undoubtedly.
And then suddenly they got really hawkish, and so they could turn again. And I think that's the catalyst under this stock market for me, is that the next easing cycle's already begun. And if you're a stock investor, do you want to miss another easing cycle?
And what he's saying there is that the Fed is so inextricably tied to the stock market that do you really want to miss the next easing cycle? Because if you remember, for those of you that were around in 2020, the reason that we had this violent V-shaped recovery has a lot to do with what the Fed did. They slammed the rates all the way to zero and then they started buying up assets on assets from the Treasury, right? They started buying bills and bonds and whatnot to the tune of trillions of dollars, an amount that we've never seen before, at rate that we've never seen before, right? And so this is why we had this huge V-shaped recovery where investors that didn't understand the relationship between the Fed and the stock market were baffled. However, those that understood the relationship between the Fed and the stock market knew that this was all Fed driven. So if we do a tepid, lukewarm 25 basis point rate hike in September, I do think that'll give the market even more runway to rally higher. However, let's see what happens with CPI on September 13th. If it comes in much higher than expected, then I do think that the Fed has no choice but to go with a 50 or 75 basis point rate hike, at which point the market could actually see a halt during then. And between now and September, who knows? It's anybody's guess. The market can and will likely be volatile until then. But as I always say, write a list of blue chips that you want to own. And when they are cheap enough for you to own them, then buy them for your long-term portfolio. Obviously, do what you like. That is what I'm doing. I actually wish I bought more, obviously, in June. But earnings were a risky proposition for me. And I already deployed a lot of cash in May in the form of those long-term positions that I established, as well as the cash secure puts that I sold. Anyway, traders, leave it in the comment section below. Let me know what you think the Fed is going to do. Are they going to pivot? Are they going to go aggressive? What do you think they should do? I love hearing from you guys. I try to respond to each and every comment. Also, make sure to book a session to improve your trading with one of our Academy ambassadors. Link is in the description below. You get access to the options course, the day trading course, the Zoom calls, and the masterminds that I run, where you can literally ask me any question on the call. You get access to the chats with thousands of qualified traders who are talking trades all day, every day, the day trade watch list, the day trades, what I'm buying long-term, etc. It's a really great value. Check that out down below. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.